Well, TCS did kickstart the Q1 earnings season. While the numbers were slightly mixed and to an extent slightly, we did see good amount of pressure there, but management commentary has been reassuring and to an extent positive. Firstly, just in terms of the management commentary, as investors were keenly watching out for that, management mentioned the revenue impact of the pandemic played out broadly along the expected lines, and management said, "We believe COVID impact has bottomed out and we should now start tracing our path to growth." Management also mentioned that the recovery is likely to be faster than the global financial crisis. I think these numbers this kind of commentary is fairly reassuring. In terms of the numbers, if you look at the revenue growth, revenue did degrow rather in terms of constant currency by 6.3% QOQ. In terms of the dollar revenue, there was a degrowth of 7%. EBIT margin, of course, did come under significant pressure. EBIT margin declined to 23.6%. This is versus our expectation of 24.4%. Profit again did see a degrowth of 12.9% with profit at 7,008 crore. If you look at the deal wins were better on a YOY basis, but of course down on a quarter-on-quarter basis. Q1 deal win stood at $6.9 billion. This is versus an $8.9 billion in the previous quarter. If you look at the vertical-wise revenue breakup, well, BFSI and retails and CPG do form good chunk of the revenues, and we did see degrowth there. BFSI degrew by 4.9%, retail CPG degrew by 12.9%. Manufacturing saw a degrowth of 7.1%. Similarly, tech services as well as communication media saw a degrowth. Life sciences healthcare, however, did report a positive growth of 13.8%. Geography-wise, well, Europe has done fairly better. It has been resilient. US did degrow by 6.1% and UK did degrow by 8.5% as it did see twin impact of Brexit as well as the COVID pandemic. Management also mentioned that in terms of the outlook, they expect revenue to get back to flat in constant currency terms by Q4 and in rupee terms by Q3. Management mentioned they should be seeing recovery in capital markets and banking from this quarter onwards, but again in terms of banking, it will depend in terms of various geographies. Manufacturing is seen to come back from Q4 on a more realistic basis. In terms of the retail, 1/3 of the customers did see zero impact, and they also mentioned that TCS has been gaining market share steadily in the key markets that they are present, and overall deal pipeline trend is fairly positive. They also mentioned a lot of demand has come in to make sure digital infra is enabled, and for the margins to improve, it would require revenue to in fact grow. Management also mentioned that if you look at the overall BFSI revenue, again, insurance continues to do better and capital market has seen short-term impact. So overall, I guess it's a fairly good and a reassuring positive commentary. The stock has run up significantly. It has gained over 30% since 25th of March, and we will have to see how the stock reacts. But yes, the entire IT sector as well as the markets would be taking cue from a positive or reassuring management commentary.